Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Accept others the way they are. You cannot change other people. To try to change them to fit what you want is like trying to change a dog into a cat or a cat into a horse. They are what they are, and you are what you are. Market-wise, let's take a look at it out here. We have the Dow Industrials down 105, NASDAQ off 35, S&P's down 13, gold contract up $16.30, trading at $1,289 an ounce. Silver up 55 cents at $18.35 an ounce. Platinum up 10 bucks at $9.92 an ounce. Copper up 2 pennies at $2.22 a pound. Light sweet crude flat, $46.82. API number's going to be coming out any second. Bonds, 10-year note up 3 ticks, 129.23. 30-year bond up 2 ticks, 162.25. Both the notes and the bonds, folks, rejected. Lower price, had lighter volume. Bottom line, they want higher price, lower yield. King dollar down 647 ticks at 97.77. The euro's trading at $1.10, and the yen is at 104.09. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. So, you're down to $1.53. You're at $211.02. We did 117 million shares. You had the price spread, had an expansion of volume. You're going into what we did, folks, is this. Now, larger picture, all these indices want to trade down to the June 27th lows. And the S&P, that's $198. What we did out here today is that you traded into the June 24th high. That's Brexit Day, okay? So that's one of your benchmarks. We got down to $209.60. You did 117 million shares. Well, bottom line, in order to break into that area, you got to do a lot more. Why? Because we had 333 million shares there, folks. So what it did, it went down, tested it, dramatically lighter volume, and that's where the bounces came in. And I expect what you're going to see now, this won't be a big bounce, but I expect you're going to see the SPY bounce about 70 cents. We're at 211.02. I expect you're going to see 211.71. And where the 211.71 comes into play is that was the low of the day this past Friday. And more than likely what we're doing here is what we're setting a B to a C up of an ABC structure on the way down. We're going to take a look at the Dow Industrials. What do you have with the Dow? Same type of setup in the Dow. Dow Industrials today got down to 17,940. 17,946 is the high of the 24th of June. So we get into the high, rejected it. Now the Dow can bounce, and it's not going to be a big bounce, 18,094. So you're talking 60 bucks. Big deal. Gold contract. What do we have with gold? Gold contract, folks, did the ABC structure on the way up. 1290 was the A to B equals C to D. We've done 1292. I expect what you're going to see now is you're going to build a little bit of cause. You're going to build cause to do what? To get up to the 1305 area. Right now you're at 1289. Silver. We take a look at the silver contract. Same type of setup in silver. Silver got into the downdraft that was out there on October 4th and got into that nice too, by the way. We did 88,000 contracts. That's big numbers. The low of the downdraft is $17.74. The high is $17.94. We got the low is $17.74. The high is $18.94. We got to $18.51. That also is going to have to build some cause, but bottom line, there's been a huge amount of repairing of the damage that was done in the metals market on October 4th, 5th, and 6th. Notes and bonds. Notes and bonds want higher price. What we had out here today in both is that you got into the lows that were generated out here last Friday. You rejected it, and you had lighter volume. The 10-year got to $129.08. It was going into the $129.09. We did 1.4 million contracts versus 1.5. Bottom line, these babies want higher price once again, lower yield. 30-year, same type of setup inside the 30-year. 30-year, we did 300,000 contracts. You're going into 350, I believe, 327. You got to a price point of 161.22, rejected it. Bottom line, that 30-year also wants higher price, lower yield. And that higher price, lower yield, by the way, folks, is setting up that this market is going south. King Dollar. What did King Dollar do? King Dollar. King Dollar comes down 25,000 contracts. This is after getting to the price point on the 25th of October of 99.090. It was a confirmed ABC structure up to 100.770. Bottom line, didn't do the whole one up. Came down with some volume on Friday. Did a counter trend bounce yesterday with lighter volume. Expansion of volume again out here today. Right now, you're at 97,775. And what you're going to, 97,230. At 97,230, what would happen is that would bring it inside the lower range. Is it 230? No, 97,610, sorry. 97,610 would bring it inside the lower range. And I do expect, it'll build a little cause to get inside of that. Well, let's put it this way. If it does build cause to get inside of that, that would be a bigger indication that the dollar wants to come back down into the 95 area to the 94 area. Now, what's going to be wild watching this shake out is, of course, tomorrow, 2 o'clock in the afternoon, we're going to have the Federal Reserve come out with a statement. The market does not expect that we're going to get a short-term rate hike. The probability of that is 16%. The probability that we will get a short-term rate hike in December is 69%. But what the market is waiting for is what is the statement going to be about, and, you can expect these currencies to move on that statement. Because the currencies themselves, they've been moving around. They've been fast, furious, and all of the above. After the close out here, we're going to have a lot of numbers for you. If we start out with Herbalife closed at $59, and it looks like it's trading at $59. You stay right there, folks. We'll be coming right back. Dow Industrials finished down 105. NASDAQ off 40. S&P's down, where are we? 16. We're going to be right back.